there's a few things that are going to be needed on pretty much any file regarding a mortgage transaction, one of which is going to be your account statements, your bank statements from which your down payment or cash to close will be coming from. And today I just wanted to quickly cover some bullet points on what your underwriter is going to be looking for in those bank statements. Now, most people, it's safe to assume, are thinking, okay, well, naturally they want to see how much money I have in this account. Of course, that's one of the first things they're going to be looking for, how much is available in liquid assets. But what a lot of people also don't tend to understand is that they're also going to be looking for incoming deposits or transfers, specifically large incoming deposits or transfers, to make sure that those are sourced. And a large incoming deposit or transfer is typically defined as the lesser of 50% of your monthly qualifying income or 1% of your loan amount. So let's say that you're purchasing a $300,000 home. You want to plan on being able to source any large incoming deposits or transfers of $3,000 or more. If your qualifying income, your monthly qualifying income is $5,000 a month, then you want to plan on being able to document and source any incoming deposits of $2,500 or more. Now, many of us these days will have direct deposit from our jobs. So if it says, payroll from Best Buy, $2,500, that is considered documented and sourced, so you don't have to worry about that. However, if it says transfer from savings account $3,000, then we would need to provide that savings account information to document and source that transaction. So remember, any accounts that are involved, we want to make sure that we have a 2-month history, your 2 most recent statements. So if you're getting ready to purchase a home, these are some things that you want to keep in mind that can kind of lessen the load as far as providing documentation. If you are thinking about, maybe you have multiple accounts and you're thinking about how can I streamline this and make this as simple and seamless of a process as possible, you may want to consider, okay, let's use the account where my income is directly deposited each month. I'm going to put all the money there. So that way, as we are updating the accounts, we don't have to update 3 and 4 and 5 different accounts. So they're going to be looking for the amount of money in the account. They're looking for your incoming deposits, making sure that any large deposits are documented and sourced. And they're also looking at your outgoing activity. What I mean by that is, let's say, for example, that you have an automobile loan through CarMax, and that's on your credit. So they see a car payment to CarMax and like, okay, I see that on their credit, that's fine. But then they notice, well, this person is also paying GMAC Financial every month, but I don't see a GMAC auto loan on their credit. So now they're going to want to know, is there another auto loan out there that I don't know about? Now, maybe you're helping out your mother, brother, sister, uncle, best friend. You're helping them make their car payment. Or maybe they give you money and you just help them, pay it through their account through your account because it's just easier that way. I don't know. But if that's the case, sometimes we can just simply get a letter of explanation and that's that. But other times there might be new accounts that have been opened, and because that activity was seen on the bank statement, it begged the question, and now we've uncovered additional debt that we now have to include in your debt to income ratio. So that's very, very important to understand, especially with all these new types of financing that have become available, through these websites like Shine or Sheen or wherever, a lot of people buy these clothes, and there's different PayPal type websites where you can purchase something, maybe some clothing or shoes or whatever, and they'll say, oh, hey, instead of paying us everything today, you can split this up into 4 payments. So yeah, in some cases that can be a good deal where it's same as cash, but in other cases it can sometimes be a longer term finance agreement, and the underwriter is going to ask about that. So if they see regular transactions, let's say they see a monthly payment of $75 a month going to Flex Finance or whatever company it is that handles that finance agreement, now they're going to want to know, I need to see documentation to see what the terms are of this. So you want to keep those things in mind when you're getting your bank statements together. Because again, if the debt's not listed on your credit, it doesn't necessarily mean that we don't have to include it in your DTI or your debt to income ratio. And in some cases, every dollar can make a difference when coming up with that end result as far as purchasing power. I hope this helps. If you have any questions about what we're looking for in your bank statements, what you need to get started on the road to home ownership, if you want to get a mortgage comparison, feel free to comment below, click the information to get in touch with me, or you can always give me a call at 281-304-6353. I hope you have a great day.